Hey everyone, it's Evan here from the Trade Risk on Wednesday, July 5th, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. I hope everybody had a great 4th of July, a great day and a half off from markets. This is our usual midweek video on Wednesdays, and we've only had a day and a half of trading, so not a lot has changed since our last update. So this video will probably be a little more brief, kind of touch base on all of these major markets and then call it a wrap. So let's jump into the charts here. S&P 500 finished higher on the day here, Wednesday, up 5 points in the cash market in the S&P, 21 basis points here. And you can see, looking at this chart, we're still just moving along sideways here. We've developed in this sideways range here, looking at the cash market from about 24.20 all the way up to about 24.42. That's contained most of the trading for the past 5 weeks or so, and we continue to be at the midpoint of that range. Now, the most recent sort of notable event was last Thursday, and we talked about that in our last update, where we had this kind of violent move to the downside intraday. We saw that expansion in volatility, and ultimately we saw price bounce off of these lows, close at support, and so far we are working ourselves higher, currently at the midpoint of this range, looking like we want to get back up to the upper end of this range. So until something changes in this price structure, until we start to either roll over definitively below 24.20 or we start to really move out with conviction above 24.42, we're really in store for what we would call a sideways, choppy, particularly summertime trading environment. Now that's the S&P 500. There's a lot more things going on under the hood. If we go to the IWM, you can see still continues to be best in breed now. Russell 2000, small caps holding up near the highs, near the year-to-date highs here. And you can see we really have this kind of rising trend line of support ever since we bottomed out here on the 22nd. So we got this short-term trend that's heading higher. And we have this flat resistance here at 142.25, 142.50, right in here, that the market stalled out in early June, pulled back, found a higher low here, and now it's working itself back up to this 142.25 level. So can we break out here in the IWM? That's going to be a good question. This is the leadership group. This is now the major index here that is holding up best on a relative basis. So we want to see if that continues. You can see the weekly chart. Take a look at the last 4 weeks action, just holding up high and tight here, kind of a higher low setup. What we don't want to see is a double top and rollover. That certainly would speak to the bear case there and would get them back sort of in favor. But for now, bulls have control here. We're above a rising 8 and 20 period moving average, so the IWM Russell 2000 looks good. And the Nasdaq 100 saw a nice bounce back today, up 1%. Now, from a price structure standpoint, nothing really had changed today. We still have an inside day from Monday's session here. We can still see that we are below a declining 8 and 20 period moving average here. So sellers still in control here on this daily time frame, on the short to intermediate term time frame. So we do want to be aware of that. However, the snapback today is nice. We didn't see new lows get made. That is constructive. What we really would like to see now, if you're a bull here in the Nasdaq 100, would be into the end of the week for more strength to kind of rotate in here. And if we could get a close above this support, above these prior wicks down here from early June, and then the highs from Monday, if we can get a close above 138 into the end of the week, reclaim the support, I think that would go a long way in at least containing the immediate sort of danger or spill off here in the Nasdaq 100. I still believe this is the weakest of the bunch right now of the group, but if the bulls can start to stabilize us here and just move it into more of a sideways consolidation through time rather than a sharp pullback, then that would be constructive for the overall market. And if that doesn't happen, if we do take out these lows now, which do seem to be pretty high stakes lows, given this was the sort of knee-jerk sell-off here back in May, and then we've had now a couple of tests of this 136 over the past several days. If we started to wash out below there, then we could perhaps pick up some steam very quickly to maybe refill this gap here from April. Again, not saying that is even the likely scenario at this point, just pointing out if we start to lose this level with authority, you want to be a little cautious there in the Nasdaq 100. So that's the overall landscape. I think the bulls are still demonstrating support. We're still seeing sectors kind of rotate through and take charge and lead to the upside, while the Nasdaq kind of cools off in a much deserved rest after a very, very strong run for the past year, or all of this year basically. But for now, S&P 500 holding support, IWM holding support. So let's see if that continues into the end of the week and sort of kick the can down the road, reassess later this weekend. So that's the overall market. Let's take a look here at some other major markets. We'll go to TLT, which saw about a flat day today. You can see the volume pick up just a bit today, which is a little interesting. You have to see if this is going to be a place of reversal, a point of reversal. But for now, TLT still has me concerned. Last week's candle, not something that looks too pretty here, kind of engulfed the June 23rd week and then closed on the lows, snapping this kind of trend line here. So I think some caution is advised for TLT going forward. Take a look at some of the increasing volume on this recent sell-off. For me, I'd like to see it back above, 125, 126 really. If we can start to get back above there, almost back inside this channel, I would start to get more neutral to constructive on TLT. But for now, it's just kind of an avoid for me, and waiting to see how this sort of shakes out on this pullback or this breakdown. GLD saw a tough day on Monday. You can see the metals, or both gold and silver, down sharply on Monday of this week. If we go to the weekly chart here, you can see just rolling back over after kind of failing at the April highs here earlier this month. We're back to support right around 116 or so. If this continues to see pressure, if this continues to wash out lower, then gold appears to be in some trouble. So pretty just not a high, it's still a messy kind of landscape for me in gold, not something that looks too attractive one way or the other. I think if you're looking to buy some dips or you're looking to be tactical, maybe this is a spot where you could try and play for a gap fill or some type of oversold bounce. But other than that, structurally, gold just looks like a headache. And silver, pretty much the same thing. You can see snapping below the lows here from May and getting dangerously close to coming back into the lows that started the year off. So, you want to be cautious here. Actually, is this new lows on the year? This, in fact, is new lows on the year, I believe, in silver. Yes, it is. So we're trading at year-to-date lows here. So that's certainly not a good sign there for the bulls. Take a look at this volume pattern just over the past several months. You can see a little more urgency on these downside moves than you do see on the up days. So something to pay attention to. Below these lows here from May and now at year-to-date lows would be very much a cautionary tale for me, and I'd want to be shorting rips or just basically staying away from it, which is really what I'm choosing to do. Next, let's take a look at oil. Oil today down 3.85%. You can see the uptick in volume here on the sell day, and that really just continues the pattern that we've seen over the past few months, that selling is happening on higher volume. You can see that really just across the board since March. Now, oil did have a nice strong move off of these lows here, up basically 10%, I believe, from the lows of the 21st of June all the way to Monday of this week. So to give back 3.85% and still hold up in kind of the top third of this short-term trend is fairly impressive, but something that still you need to be cautious of, because we do have this structural downtrend in place in oil. Now, we could put on, I don't have my MACD on here or anything else, but if you put on momentum indicators or anything like that, you will notice that momentum has been positively diverging. That is, as we've made newer price lows, MACD is not making those lows at the same time. So there are signs of, potentially a bottoming process or oil that could, start to reverse this trend. However, from a price perspective, we really don't have that yet. We'd have to see, this downtrend or these series of lower lows and lower highs get broken before we can, convincingly say that something has changed here. If you're tactical, if you're a short-term active trader, then you can be playing in this space, looking at this volatility, taking advantage of 4% moves, or even trying to play for a bigger reversal at hand. I think that all makes sense, but from from a higher level, sort of just price structural basis, if you're looking for trends to reverse, trend lines to break, price action to really speak to the thesis before getting involved, then I think you're still waiting and looking at other sectors that are currently in a favorable bullish price pattern. So USO, maybe there's something developing here, something to keep an eye on. I think your first step or hint would be if we could put in some type of higher low here. Maybe we get another day of selling, but maybe bulls step in around $9. Can that hold? And then can we start to make ourselves higher and then, take out this prior swing high from Monday of this week? That would start the bullish sort of scenario there from a price perspective. So that's USO. Natural gas, not so fortunate to have had such a big run recently, bounce to the upside, because this is now making new lows here, and this is new lows on the year. So this is definitely kind of similar to silver. Sellers very much in control. We did see the uptick in volume. If you go to that weekly chart, you can see a pretty ugly looking formation here in natural gas. Let's see if it sticks. Keep an eye on this. It definitely seems to be in play, minus 4% to the downside. If we reclaim 650 in a fast fashion over the next week or so, then that would be, potentially lead us to maybe a false breakdown here. Maybe this is getting everyone's attention, capitulating some of the final, weak hands here, or some of the hands that tried to buy this 650 retest of the March lows. If we start to reclaim 650 in a sharp sort of high volume fashion, that's something that would be interesting. That'd be interesting to me. I'd potentially look at some type of false breakdown reversal play. But until that happens, until and if that happens, I will not be touching natural gas. Looks like sellers again are in control here, and I would not want to be trying to blindly knife catch this at this point. So that's natural gas. I think that's all of the major markets that we just covered. Let's take a look at some of the sectors. Sectors really haven't changed. XLK today, as we talked about the Qs bouncing back, you can see XLK getting a nice bounce back. Looks very similar to the Qs. Still an inside day, but nice to have technology working. There's a large component there of the S&P 500 that is now tech, and it's always nice to have that working. Semiconductors, same type of thing. Nice high volume kind of snapback today as well, getting back above this trend line, these recent highs. That would be constructive. Our usual kind of leadership suspects, XLV, healthcare, we've been talking about this trend as it's been working itself higher, and it looks pretty actionable today as we finally got a nice break above recent highs, small uptick in volume. We've been pulling back over the past week or two, and now you can see we might be trying to resume that trend to the upside. So healthcare, I like it, have exposure to it. IBB, equally as good, as strong here, getting a nice little snapback on an uptick in volume. This is a sector that we're long. We are long the IBB outright from a position last week. I believe it was Thursday or Friday that we got into this trade. But, I like the weekly structural kind of breakout here. This was back on the 23rd of June when we saw this big move higher on high volume, 10% above this $300 level. And then you had this pullback on very light volume here, and arguably today was still a fairly light day, but I like the high volume breakout, the low volume pullback, which was our entry, and now we're looking for this to try and continue higher here. So I like biotech, I like healthcare, XBI, you could look at that as well, looks great. Financials continue to work here. We're getting closer to the highs from March or February from earlier this year, but a weekly chart shows these to be very nicely in motion. So financials, healthcare, biotech, those are all working right now. Materials do continue to work as well. XLE, we sort of talked about this with oil, and this is kind of a similar comments apply here. If you were to throw MACD on here, or some type of momentum oscillator, you'd notice that we aren't making new momentum lows, depending on what period you're using. But we haven't been making new momentum lows as prices continue to make new lows here in XLE. So maybe there's something at work here. You'd have to drill down potentially to some of these individual components, try and get those that are holding up best. Keep an eye on this trend line here, and And you know, it's basically similar comments apply to USO. If you're looking, if you're tactical, if you're active, and you want to try and, you know, stake for a bigger reversal here, then that's something to pay attention to. But from a structural basis, we really want to, you know, keep an eye on that price breakout from this channel. XLU, XLP continue to stay weak. XLU, you can see now really threatening this trend line back below $52, back into this messy range here from March, April, and May. So utilities, staples acting pretty weak here and staying weak at this point. Maybe they're at a point where they're ready to bounce, but we're still not seeing much evidence of that just yet. So those definitely are the laggards at this point. And I think that's it for this video. So thank you so much for watching, and talk to you guys in the next video update. Thanks.